Okay, so let's get right to the questions. Our first question is from an anonymous attendee. Should we use fundamental analysis or can we use technical analysis as well? Who'd like to take this question? How about ibigay ko kay Charles, since Charles was talking about qualitative and numbers earlier.
Okay, I can take a stab at it. Okay, I guess it would depend on the PSE for depending on their rules, no. But at the very least, even if because I believe the competition, the main focus is really on fundamentals.
Right.
But having said that, you could still definitely use any knowledge on technical analysis to help you understand what the market is thinking. But that's a very important question that you always have to ask. If, for example, let's say you're bullish about a particular event or a particular company, and then you could, by looking at the charts or the technicals of the company, it could give you a glimpse on what the market is feeling about that issue. So it could help you even in your analysis of the fundamentals of the company. So at least that's how I would probably use technical analysis.
Okay, thank you, Charles. Just asking our technical team if all the panelists are pinned to the screen, because I don't know if that's the case. Just send me a chat in the chat box if we're all pinned to the screen. Okay, yes, we are all pinned to the screen. Okay, Charles, I actually have a follow-up question para sa'yo talaga, no? In your practice, do you do a combination? Kasi I also have a similar question from Daniel John Marcelo. Do you do pure fundamental analysis or do you apply some technical analysis yourself, Charles?
Like for COL, we have a separate department that does the technical analysis. It's not, okay. We don't, like for the research team, we don't really come out with, trend lines and moving averages. But then again, personally, I still use it even as an analyst, because again, it gives you that it answers that question. So for example, let's say you're very bullish in a stock, but it's downtrending. So you're probably gonna think, okay, there might be something wrong. At least the market is pricing in something, right? I mean, they're concerned about something. So it's a signal for you to dig deeper and ask around, do your due diligence to check what is it that could potentially be impacting the share price. So yes, indirectly yes, but I mean, yeah, we don't really talk about moving averages and trend lines or whatever technical indicator in the actual research report. Yeah.
Okay, so there you have it, guys. So while we can factor in technical analysis for purposes of this competition, we will give a heavier weight on how you evaluate the company based on its fundamentals and on the methodology that you used or applied in coming up with your valuation. Speaking of valuation, I have a question here from Mark Cadorna. He's from UST, and this one is for you, Herman. How can we integrate ESG factors into the valuation process, especially with the recent development in BSP's guidelines to banks on incorporating sustainable principles for investment activities?
Okay. Yeah. Thank you for the question, John.
All right.
I think the ESG theme investment is growing in its popularity. So a lot of funds are already allocating their investments towards this theme. So I think the resulting impact is that those companies that have strong ESG will trade at a premium compared to their peers. So I think one way that our contestants will be able to incorporate ESG factors that they can factor in a certain amount of premium to their company if they think the company is practicing a good ESG in its operations. So I think that's one way.
All right. Thank you, Herman, for that. Now we have a question that's quite relevant to current events. Is high inflation inherently bad for all companies? What if that particular industry benefit from it, such as consumer staples? So inflation is, I think, one of the risks involved in investing. So this question goes to Christelle.
Hi, yeah, thank you for the question. I guess in a way, yeah, you are right. But for me personally, I guess for consumer stuff, I guess some companies would really be it would be difficult for them to implement sticker shock price increases right now, especially to prevent sticker shock. At the same time that we are in a high inflationary environment. So it's really difficult to handle or to manage your public perception. So I guess for me, I guess it would be difficult really in this time in our to prevent adding fuel to the inflationary fire. But yeah, you're right. I guess some companies would have their supply agreements or agreements with their customers that are linked to inflation. So it would be good for them. But at the same time, I guess some populist policies would prevent them to actually implementing those price adjustments. So it would be positive in a way, but it would also have its own cons or disadvantages. Thank you.
Thank you, Christelle, for that. Now, here's a question that I think is also quite interesting. Should we consider as well the current economic condition that we are in? Coming up with a narrative, not just the performance of the company among its peers. How about the index as well within the ASEAN region? I'll pass this question to Mika since from an exchange perspective. What are your thoughts on this?
I
When they
the background, the economic background, the industry background should always be taken into consideration whenever you do stock analysis. So parang it will give you the context of the story that you're about to tell about the stock. So I think yes, you should do that.
Okay, thank you very much, Mika. Now on the spreadsheet, since this is a requirement to be attached in the report, mainly just to help us also in gauging, the thought process that the teams went through in coming up with the research report. This is actually suggested by our friends from First Metrosec. So I'll pass this on to Robbie. Would we have any certain guidelines or outlines for the spreadsheet?
Well, yes, thank you, John. So essentially what we're doing here is we want to give the students free reign to conduct their research at their own style, at their own design, at their own pace. So but of course we need to be able to follow all of the topics that were discussed here this afternoon. So as much as possible, we want to stay within the lanes of what was discussed here this afternoon. We don't want to deviate too much, like Charles said, no. Maganda kung ang emphasis pa din natin dito would be more on the fundamental side, because it's a good idea to take a long-term view. I think taking a long-term view when it comes to researching a stock makes you respect it more. 'Di ba? Hindi ka in and out lang yung approach mo. So that's something that definitely you should be doing within the guidelines of producing your output.
Thank you very much, Robbie, for that. Okay, back to valuation. Are there ways to be able to combine certain valuation methods, or should we stick to only one that we believe makes the most sense? This question is for Herman.
Yeah, okay. Yeah, thank you for the good question. Yeah, for me, actually it's making use of different valuations for me lets the analyst look at the company at different angles. Sometimes I make use of different valuation methods when I think a single valuation method will not capture the value of a certain company. For example, in a recent IPO, I made use of EV, EBITDA, PE, and DCF, and I just assigned various weights in these valuations. So yeah, as I explained earlier, it's really up to the analyst's discretion on which methods he thinks will best bring out the value of a certain company. And so if he thinks that he should make use of three valuations, and he should just assign a corresponding weight for each of these valuation, which he thinks will really represent the value of a certain company. So maybe he can assign a like 30%, 30%, 40, something like that, or 50-50. Or if he thinks a certain valuation is already enough, it will already suffice. Then if he's comfortable with that, he can just stick to one valuation.
Okay, there you have it. Thanks, Herman. I have a question here that is specific for Charles. Si Leo Neil Luste said that during your presentation, the metrics are not comprehensive. Hindi mo pa pinresent lahat because for purposes of a very short discussion. Can you give them examples of the most important metrics that they can use when investing?
Okay. Again, the reason why it's very difficult is because it's always different for each company. So the metrics that you will use would depend on the company that you're analyzing. Like to generalize what's most important is I mentioned it a while ago. Again, we all tie it back to earnings of the company, right? So that would be my first question. What's your outlook on earnings? And then whatever is needed to justify that answer, then that's what we will highlight.
Okay, thank you for that, Charles. Okay, questions are still coming in. Go back muna tayo sa risk. What is the most effective way of identifying risk in investment, especially on stocks? Very general question, but take your take on this, Cristel.
Yeah, thank you for the question. Personally, I would start first on reading the disclosures of the company. So in the annual report, there's really a comprehensive list of risk factors that the management would discuss, and this would also include the indirect and the direct impact of that of those risk factors to the company. But I guess in narrowing down the risk factors that are really relevant to the company. Siguro, I guess a good number would be 3 to 5. And then I would personally select or choose those risks that are really would have material impact to your target price or to your recommendation. So for example, if you have a buy rating on a particular stock, select those risks that would have or that would change your recommendation to a neutral or to a sell rating.
Okay, thanks, Cristel. For the next question, I think this can be for Charles and Herman. You can give your take on this both. What are the most essential factors to consider in order to identify the intrinsic value of a company or a stock, especially when making that investment decision? Sige, let's go with Herman first and then Charles.
Okay, so basically, sorry, can you please repeat the question, John?
Oh my, nilagay ko na sa answer. Teka, let me look for it.
Yeah.
Ito.
It's quite
Okay,
long.
what are the most essential factors to consider in order to identify the intrinsic value of a stock or a company, especially when making the investment decision?
Yeah, okay. For me, it depends on the type of analysis that the analyst is using. It depends on whether it's using a top-down or bottom-up approach. I think for a top-down approach, wherein he will start with a bird's eye view of a certain sector, and if a company has a sector leading revenue growth, then I think that can be a starting point in order to select which company can be a buy candidate. And also, I think it will, as what Charles earlier explained, it really goes back to the cash flows and the earnings capability of a certain company, because that's really what investors are looking at. So yeah, so I think it's really up to the earnings and the cash flows.
Thanks, Herman. Charles.
Yeah, so at the risk of repeating myself again, again, yeah, so it's really about the earnings. So
Okay.
I just want to tie it back to the valuations part, no, because it was also discussed a while ago, diba? On the valuations part, you need your FCFF, FCFE, and those numbers will indirectly be dependent on your earnings assumptions, diba? So when you're building your model, when you're identifying let's say your revenue growth assumption, your margin assumption, cost growth assumption, and so on and so forth, uh, what di ba, the whatever earnings outlook you may have can now be translated to a cash flow that we can discount to use for the DCF method. So again, yeah, so bottom line is the earnings, and so we must focus on whatever the earnings driver would be. So whatever would drive, whether it be the expansion of the company, or let's say introduction of a new product, or let's say higher prices or higher margins from that company, or whatever, right? So it's all about the earnings.
Thank you, Charles, for that one. Thank you also, Herman. Here's a practical question actually for the competition proper. For the valuation, what will be the last price or the last traded price date, yung as of date? So aling date ba? Actually, hindi pa namin na determine when we were having the meetings because we were actually having a very tight timeline. But for this one, what I'll do is I'll send an email to all the registered participants on the as of date. But normally you can also indicate that in your report. So nandun na din yung mga assumptions ng inyong report, no? So assuming you're doing the valuation based on that as of date. All right, guys. We also have other questions that are actually really pertaining to the competition, like will we provide the format for the one-page stock report, or are we free to do our own? When it comes to the creativity of presenting it, we give you a free hand as long as the segments or the components in the stock research based on the prescribed outline is there. So that's okay. So you guys go ahead. Who will be the judges for the stock research competition? Surprise pa yan sa ngayon. We will be announcing the judges. Actually, they can be one of the people you're seeing at the screen right now. So, but that depends pa. So we will announce that later. Okay. So what makes a winning stock pick? Parang ang hirap sagutin. But we will park this question for later. I guess this can be the parting words from our panelists. Parang tip na lang nila to come up with that winning stock pick. Okay. This is a good question. What might be the common challenges that they may face in analyzing and assessing stocks? Who wants to take this? First to unmute the mic takes the question. Walang gusto mag-unmute. Go ahead, Charles.
Yeah, sige, I'll try. Yeah, probably your biggest challenge would be, having that baseline level of information for the particular company that you're studying, diba? So what I mean by that is, so we're assuming you're going to be presenting to a panel, and of course they're going to be they have a lot of info on that company. So as a baseline, it's very important to know what is the market, parang what are the market concerns about that stock, what's the market view on that stock. So the solution to this challenge is to just read as much as you can. So if you're, for example, targeting to cover a particular company, then if you could read broker reports of your particular subject company, then it gives you an indication, ano ba yung pinag-uusapan ng market about it? What are their thoughts? What are their outlook? And then now you could add value, diba, by going on top of that.
Thank you very much, Charles, for that. Anyone wants to add? common challenges that you think they may face in coming up with the report? Probably the very short deadline. It's one of the challenges. But you know, guys, sanay kayo dyan, di ba, mga students? Okay, Herman? I thought Herman was answering, nag-unmute siya. But I actually have a question for you, Herman, regarding the valuation methods. Diba you said earlier in your presentation that they can apply weights. Is there an objective basis when applying the weights? This question is from Gabriel Ramos. To each
Okay.
valuation method.
Yeah, thank you for that question, Gabriel. Yeah, short answer is there is no objective basis for the weights. It really depends on the comfort level of the analyst in using a certain method. So if it's his judgment that a DCF method will be the best to bring out the value of a certain company, then you should assign a heavier weight on that. And if a PE can also be used, but to a lesser, let's say to a lesser extent, then he can assign a lighter weight than with DCF. So yeah, to answer your question, there is really no objective basis. It really depends on the comfort level of the analyst in using the methods.
Okay, thank you, Herman, for that. Sige, last question na lang for us this afternoon. It's a Friday, so that hindi, may mga pumasok pa. Okay, last 3 questions. Okay, for the valuation, should we compare, consider, and benchmark other stocks in the same industry or sector? I'm inclined to answer the question, but of course, Herman gave his insights on this one. So back to you, Herman, for relative valuation ito eh.
Is the question in the chat box?
It's in the Q&A box. Should we compare, consider, and benchmark other stocks in the same industry or sector?
Yeah, of course. That's really what you do in a relative valuation. You compare a certain company with those of its peers that have similar business models, exposed to the same risk factors, and operating under the same sectors. So you really use them as your benchmark. So you can get their median or you can get their mean, depending on your discretion. And the analyst should also be able to defend why he thinks a company should trade at a premium or at a discount relative to the benchmark. So yeah, to answer your question, yes, in using a relative valuation, you should really use as a benchmark your peers, whether regional or local.
Thank you, Herman. Okay, so to wrap things up, I'll just ask some parting words or tips from our panelists. What makes, and please try to answer the question, what makes the winning stock pick or the winning stock research competition? All right, so ano na lang, in the arrangement kung paano nag-present kanina, let's start with Mika Ku from PSE.
Sige, what makes a good stock pick? First, I think, or actually the most important thing for me is you pick a stock that you're comfortable with, a stock that parang you're interested in. Kasi with choosing a stock, you have to research a lot. You have to look through its financial statements. You have to analyze how the business is doing. So for me, it should be something that you're really interested in. Yeah. And good luck to everyone in this competition. Thank you.
Thank you, Mika. Robbie?
Yes. So for me, what makes a winning stock pick? Siguro I would like the presence of a solid narrative. Also mentioned by Charles kanina, di ba? Syempre, we need to have that narrative with it because usually it is followed by demand. So that's something that we have to consider because again, madami naman talagang magandang companies that are listed in the Philippine Stock Exchange. But some of them outperform the others. Some of them have higher PE ratios because there's just greater demand. They have a better reputation or there's a better narrative surrounding them. And of course, it's a good idea to always, of course, consider yung earnings growth. No? So it should always be present, not just making money, but making sure that the company is able to grow its earnings consistently. So, yun, siguro for me, that would be my considerations. And also, good luck to everyone. And I hope, I wish you all the best in this competition.
Thank you, Robbie, for that. Charles, floor is yours.
Yeah, maybe I'll just start off from what the last thing Robbie mentioned, no, about earnings growth. I guess I just like to highlight that in the market kasi everything is relative to expectations eh. So that's what I would like to emphasize. If you could spot a company that you think would beat or would outperform the consensus view, the market expectations, then that's a very promising investment, diba? So you have to, but the challenge is knowing what the market is expecting. No? That's quite difficult to measure as well. But yeah, so relative to market expectation, if you could find something that could outperform in terms of earnings, then that's very very attractive.
Thank you, Charles. Herman?
Yeah, okay. For me, I think the question is more complex than it sounds. For me, maybe I would specify first the time horizon that we're talking about. If it's, let's say, if it's for the long term, then I would go for stocks that will benefit from mega trends. So it really depends on the horizon. And then maybe for the, let's say, short to medium term, at the current market environment, it would be quite a challenge to look for a stock that will maybe appreciate in stock price. So maybe an analyst can also look into those that can earn via dividends. So maybe cash flows can be a good starting point in looking for yield stocks that can be viable yield plays. So that's, and also maybe an analyst can also look at companies whose earnings will be resilient despite the current economic environment. So those that can pass on inflation to their consumers, and those whose goods and services are considered as staples. So that's my.
Thank you, Herman. And finally, Christelle?
Just echoing what Mika said, I guess the key for a winning stock pick would be familiarity. So choose a stock that you would be comfortable valuing it, and then make sure that your arguments are solid, and make sure that you are well read on your featured stock. So it doesn't have to be a very big company or a large cap company as in the criteria. Diba, you can select those stocks that are not index names, so that are not included in the PCOMP or in the PSEI. So just make sure that your arguments are very very solid. It doesn't have to be really a large company, as long as you are very comfortable with your arguments. You are familiar with the company, and you think that it's good, or the long term prospects are good for that company. So yeah, thank you.
Thank you, Christelle. Thank you to our panelists for preparing the presentations, for those encouraging words for our participants. To our participants, thank you for your questions and for actively participating in the Q&A.